Hey folks, CA Rachana Ranade here and I welcome you all to a super duper interesting video. Why? In today's video, we are going to understand how Coca-Cola turned into a billion-dollar fortune for Mr. Warren Buffett, and we are also going to try and analyze whether we can use the same formula to change our fortune as well. Well, if you know, needless to say, right? Mr. Buffett is one of the most successful fundamental investors and who has a current net worth of $104 billion. He is currently the fifth richest person in the whole world. Warren Buffett's Berkshire Hathaway holds 400 million shares of Coca-Cola, and it is the fourth largest holding of Berkshire Hathaway, representing 8.51% of the total holding. But the big question is, why Coca-Cola? Was he in love with the taste of Coca-Cola since childhood? Is that what you're imagining? Control. In fact, as per one of the articles of Business Insider, Buffett was a Pepsi fan for 50 years. Then what do you think might be the reason behind the shift in his loyalty from Pepsi to Coca-Cola? Well, back in 1985, one day, Mr. Donald Keogh, the then COO and director of Coca-Cola and the childhood neighbor of Buffett, read in a magazine that Mr. Buffett was a fan of Pepsi Cola Cherry. He quickly sent him some samples of Cherry Coke. These samples hit him, and that is how he switched to Coca-Cola from Pepsi. Let me also tell you that in 1986, he made Cherry Coke the official drink of the Berkshire Hathaway annual meeting. Well, then arrived the stock market crash in 1987, where almost all stocks were beaten down, be it fundamentally strong stocks or weak stocks. But then what made Mr. Warren Buffett place his bet on Coca-Cola in spite of the fact that it was crashing even after the 1987 crash? Was it just the love for soda that made him place this bet? Answer is clearly not. He understood that during this crash, Coca-Cola's valuation had definitely plummeted, and it was a classic example of a good company going through a tough time. He had also understood that Coca-Cola had the biggest market share and it had the potential to grow in the overseas market. In 1988, Mr. Warren Buffett bought shares of Coca-Cola worth $1 billion, which was equivalent to 6.2% shares of Coca-Cola, and it was like the single largest position of Mr. Warren Buffett's Berkshire Hathaway Incorporated. While he wrote a letter to his shareholders explaining the investment rationale behind this, he said, "We expect to hold these securities for a long time. In fact, when we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever." Well, till now we have understood that it was Mr. Warren Buffett who had loved the taste of cola. It was him who had loved the fundamentals of the company, and it was him who had felt that this company was fairly valued when he bought the shares of the company. But what about the rest of the world? Had the rest of the world recognized this as a brand or not? To explain this concept, let me fast forward from 1988 to 2005. In 2005, the scientist Reed Montag conducted an experiment to understand the difference between Coca-Cola and Pepsi in 3 iterations. In the first place, he placed 2 bottles, one each, of Coke and Pepsi by removing their labels. He found that the fMRI scanner used to observe the brain activity showed no difference for Coke and Pepsi. In the second iteration, he kept the labels on the bottles and noticed that the fMRI scanner showed some activity in the brain's cerebral area when they tasted Coke. In the third iteration, he swapped the labels on the bottles, and what he noticed was a surprise. This time, when the people came and tasted Coke from the Pepsi labeled bottle, nothing happened. But the moment they tasted Pepsi from the Coca-Cola labeled bottle, the fMRI scanner showed the same activity in the reading. This tells us how Coca-Cola had created the brand value in the eyes of consumers and gave it a competitive advantage. Well, by now you might have understood that even in 2005, it had emerged as a big brand. But by the end of 2021, it had come up to a valuation of $33.2 billion as per Brand Finance. If I talk about 2022, it was now selling to more than 200 countries in the world, and it was selling 200 brands of beverages, right from Costa Coffee to vitamin water. Coca-Cola's iconic name and global reach created a moat for the company. And if I again go back to Berkshire Hathaway, by now it was holding this same stock since what? Since 1988. So it had been more than 30 years that the company was holding this stock, and in fact it also kept on accumulating this stock in the coming years as well. Now you might be wondering as to how much profit he might have earned on this company shares, and also how much dividend it may have earned. To tell you some figures, in 2020, Buffett's continued investment in Coca-Cola returned 1,550%, excluding dividend. And let me also tell you that Coca-Cola is a dividend king. Why? Because straight for 60 years, it has been keeping on increasing the amount of dividend. Currently, Coca-Cola pays a healthy forward dividend yield of 2.8%, and with Berkshire Hathaway's 400 million shares of the company, now they earn a whopping $704 million in dividend payment each year. Well, by now we have understood as to how the investment in Coca-Cola built a fortune for Mr. Warren Buffett. But now let's come to another important section of the video as to how we can use these learnings to build a fortune for ourselves. We are going to discuss this with the help of 5 points. The very first point is invest in what you know. If you remember, Buffett first tried to build a conviction over the product. He loved the taste. He did a lot of study to understand the fundamentals of the company. He understood the valuations of the company, and then he entered into the stock. The second one is look for a sustainable competitive advantage. Mr. Buffett had understood that Coca-Cola was definitely a market leader, and it had created an amazing brand value in the eyes of the customer. That is when he had understood that it would have been very difficult for a competitor to eat up a major chunk of the market share. The third one is buy at a reasonable price. If you remember, Mr. Buffett made it as the official drink at the annual general meeting in 1986, but that was not when he bought the stock. He bought the stock after the crash of 1987, when he understood that the market price of the stock was below the intrinsic value that he had calculated. The fourth one is that one should stay invested in good quality stocks for the long term. Well, as on date, it has been almost 30 years since Mr. Warren Buffett entered this stock, and if you remember, this stock has given a staggering return of 1,550%, and that too excluding dividend. Moving ahead with the fifth one, which is diversification. Mr. Warren Buffett believes that all eggs should not be put in one basket, and that is the reason why, even though Coca-Cola holds a major chunk of his portfolio, that of course doesn't mean that the entire portfolio is invested in one stock. Well, before closing today's video, I want to know your thoughts on two particular points. I personally have observed that people are now seeking more healthier options as compared to carbonated drinks. If this trend continues, what do you feel? Will the overall sale of carbonated drinks slump in the coming few years? And will this lead to a drop in valuation of companies like Coca-Cola and Pepsi? And number two, if you feel that nothing of that sort is going to happen, people are still going to continue the consumption of carbonated drinks, then can this man again disrupt the carbonated drink space, and can it eat up a big chunk in this specific sector? I want to know your answers, your thoughts, so please don't forget to put your answers in the comment section below. If you loved this video on the curious case of Coca-Cola, don't forget to smash the like button, don't forget to share this video with your friends. If you have not yet subscribed to the channel, don't forget to do that as well. I hope you enjoyed this one. Till then, take care, Jai Hind, and bye-bye.